And that's the first question we also ask Devang Mehta from Spark Private Wealth Management, who is joining us now. Devang, good morning. Thank you for joining in. It's been the sector that has been in the spotlight now, Devang, this auto sector. First with regards to this potential GST cuts, now with regards to this potential lifting of curbs on the rare earth magnet exports as well. Do you see that all of these steps that have been taken in the last couple of months, even with regards to the income tax cuts for that matter, provide a boost to the sector ahead of this upcoming festive season?
Morning. Thanks for having me on the show. Always a pleasure to be on CNBC TV18. Yes, ideally, whatever news flow we are seeing in the last couple of days, let alone be GST, but be it the progress of the monsoon, be it the rural India coming out of stress because of one monsoon, second of demand situation improving a little bit. I think whatever sectors are coming back to the fore are sectors which primarily did extremely well from 2003 to around, say, 2021-22. Post that, I think 2-3 years of strong headwinds for the auto sector, where those selective companies came out and delivered good numbers and came up with aggressive, great models which found favor in the market. I think the trend has completely changed, right? People used to buy hatchbacks, and now I think the elite Indian consumer, aspiring Indian consumer, is now buying more SUVs. My sense that a combination of good urban consumption, good rural India coming back to the fore, I think people are wanting to find substitutes for sort of discretionary consumption, and what better than auto, right? So India still today has per capita in terms of auto super less penetration than what we talk about the developed economies or certain developing nations. So my sense that this icing on the cake which government has tried and provided, if this comes through in the next 1 or 2 months, I think this will augur extremely positive. Macro conditions are positive. RBI has been on a rate cut spree. There is liquidity across the company's balance sheets are, I think, quite powerful right now. And with the launch of new models with all these companies, I think there is a revolution which is also going to come into EV. So my sense, this sector probably will be beneficiary. Don't look at the short-term repercussions that the stocks have bounced back. But I think this probably seems to be getting into a structural next couple of years. Really, that's what seems right now.
Devang, hi. What would your call be on consumer durable companies? We were just chatting with Blue Star and we were discussing, about this GST rationalization. If the GST rate on room air conditioners comes down from 28 to 18%. While it's good news on paper, the cost comes down for consumers. In the interim, because there is lack of clarity on the effective date, customers might choose to defer their sales. And therefore, if we don't get clarity, then there is a possibility the whole festive season on which the demand rests could be a washout. And there's not much companies like Blue Star can do. I mean, how are you thinking about this issue for consumer durable companies?
Yeah, Rima, very well said. And then that is a distinct possibility which can happen, that probably people defer their demand. But what I see for the Indian consumer right now is that I think there has been a lot of pent-up demand for this type of goods over the last 3-4 years, and quarter over quarter, generally we have seen a decent set of numbers coming from this type of companies. But yes, that's very well said. If the clarity does not emerge soon, probably there will be a couple of months of a dull run. But again, market is a discounting mechanism, and the stock prices would sort of not correct big time, because markets know that if people defer their demand, and this cut even comes through probably in the last week of September or probably even in October, I think then there will be a lot of pent-up demand which the companies would sort of benefit from. Yes, but at the expense of saying that this quarter can be a bit of a drag if clarity does not emerge soon, that can happen. But I think market will take it with a pinch of salt.
Okay, yes, that's exactly the point, because it's still proposed and there's no specific date that has come by as well. Devang, what's your take on oil marketing companies? They have been surging. There's a note suggesting that Russian crude oil purchases would continue, and that's something which would aid their margins. Do you think the triggers for these companies is already priced in, or there's still more room for improvement from here on?
So then ideally, yes, probably there can be some more headroom here. I think what one crude has cooled down around 66, 67 Brent as we talk. Yes, India probably is still on a superb wicket in buying oil from Russia. That's also played out very well. Having said that, these are more thematic or more tactical plays that one should engage into, because if somebody takes a structural conviction call, that is going to be difficult on OMCs, as there is always a crude price pressure that comes onto it. There is always a government compulsion or a regulatory thing which comes in and sort of deters the sector. So as I said, it will be more tactical in nature for the portfolios, but there are n number of great themes available right now, domestic centric themes. Consumption has again come back to the fore. There is capex. There are capex companies which have come up with good set of numbers, be on execution, be on order book. I think I'll probably set my sight in lot to do with consumption, capex, and a bit of financialization candidates rather than being into OMCs for a long-term play. Yes, as I said, it can be more tactical.
Devang, correct me if I'm wrong, but another sector which is difficult to make a structural conviction call is metals, right? Because there are so many moving parts to this sector. What's your call here? And is there or are there sectors where you are betting on as of now, considering the changes that you have seen taking place over the last 1 month?
Yes, so I think we've been very vocal saying that anywhere where there are global linkages can be more tactical, can be sort of more a type of, I'll not use the word trading, but it will not be sort of an investment thesis which one could lay down over there. So in that parlance, yes, we generally have been avoiding something like IT since long. I know that probably the valuations are now probably at a level where a lot of people would buy it, but we are still, as I said, avoiding things which have global linkages. Coming back to the sectors that which we are probably showing strength and we are quite confident on. We feel that typically micro sectors in India, a lot of sectors, I'm not talking micro caps, but a lot of sectors which are probably proxy plays, the first mile proxy play, be it for semiconductors, be it for engineering, be it for manufacturing, be it for stamping, lamination, power automation, cryogenic equipment, port infrastructure. These are companies which probably, if the consumption universe also starts showing strength, there will be a lot of manufacturing which would be done. There are a lot of linkages internally also. So financialization candidates like depositories, like some AMCs, financial intermediaries. These are companies where I think you can lay a lot of strong foundation. All these companies typically would probably have the top line growth anywhere between 12-15% and bottom lines anywhere between 18-22%. So my sense, more domestic centric candidates, oriented, capex oriented companies. Consumption, we are trying to find out. Yes, the view does not change, but we would love to add certain consumption names in the portfolio. If there are not, we have some consumption names, of course, but we are on the lookout for more consumption type of candidates as the things seem to probably change also on the demand front and also on the GST front.
Okay, all right. Thank you so much for joining us, Devang. So that's a market conversation. But it's time for a short break now. We get you an update on the Mumbai rains on the other side.